Good evening, viewers. Following yesterday's bearish close on March 27, 2026, where the S&P 500 dropped 1.74%, the Nasdaq fell 2.38% into correction territory, and the Dow Jones declined 1.01% amid escalating U.S.-Iran geopolitical tensions and surging oil prices above $100 per barrel. Here's an updated look at 10 U.S. stocks that analysts and market conditions suggest could offer selective upside through late April 2026. While the broader market faced risk-off pressure, individual stocks showed dramatic moves. Energy and select AI/infrastructure names bucked the trend as top gainers, while high-valuation tech and travel stocks led decliners. For instance, Argan Inc. AGX surged plus 37.91% to $566.62 on strong fiscal 2026 results and AI/data center demand. Other notable gainers included Unity Software, U, plus 13.54%, PEDEVCO Corp, PEDE, plus 12 to 14%, and several energy-related plays. On the loser side, tech heavyweights like Meta, Alphabet, and Nvidia fell 3 to 8%, with travel names hit by higher fuel costs. For each of the 10 U.S. stocks below, we provide a core fundamental summary, technical summary, short-term trading strategy, next 30 days, long-term trading strategy, risk analysis and mitigation, last 52 weeks price trend, highest and lowest price, and expert opinion. Number 1. Argan Inc. AGX, AI and Data Center Infrastructure. Core Fundamental Summary. Argan delivered record revenue of approximately $944.6 million for fiscal 2026, with Q4 revenue at $262 million, up 12.7% year-over-year, and EPS of $3.47, a strong beat. The company benefits from a massive backlog in power plants and data center construction tied to AI demand. ROE stands at roughly 31%, net margin 9.8 to 13%. However, valuation is stretched, PE roughly 48 to 55x, well above industry roughly 32 to 35x, P/B roughly 14.7x, and DCF models suggest it trades at a 60% premium to intrinsic value. Consensus rating is hold, with average price target roughly $355 to $385, below recent highs near $566 after the plus 38% surge. Strong momentum, but expensive on fundamentals. Technical summary. Stock has been on a powerful run, up roughly 315% over the past year, recently hitting new highs around $492 to $566. 50-day MA roughly $371, 200-day MA roughly $319, clear bullish alignment. High momentum score, 95 out of 100 in some models. Recent volatility is elevated. Watch for pullback to moving averages as potential support in a risk-off market. Short-term trading strategy, next 30 days. Ride momentum on continued AI contract announcements or positive sector rotation. Consider buying on dips toward the 50-day MA, roughly $371, with tight stops below recent swing lows. Target partial profits at $600 plus if oil/geopolitical premium sustains risk rotation into infrastructure. Use options for leveraged exposure given high volatility. Long-term trading strategy. Hold core position if AI capex boom persists, but trim on extreme overvaluation. Accumulate on meaningful corrections, 20% plus toward fair value. Focus on backlog conversion and margin expansion as key catalysts over 12 to 24 months. Risk and mitigation. high valuation risk and potential sharp correction if AI spending slows or broader market risk-off intensifies. Mitigation, use tight trailing stops, take partial profits on strength, limit position size to 5 to 7% of portfolio, and pair with defensive holdings. Laurent premium valuation. Number 2. ExxonMobil, integrated oil major. Core fundamental summary. ExxonMobil remains a cash flow powerhouse with massive scale, production roughly 3 million barrels liquids per day, refining capacity 4.3 million barrels per day. TTM earnings roughly $28.8 billion, revenue roughly $324 billion, PE roughly 23 to 24x, low debt to equity roughly 15%. Strong dividend plus ongoing buybacks, roughly $20 billion annual run rate. Analysts note some overvaluation at current levels, implied limited upside in base case models, but geopolitical oil premium supports resilience. Consensus leans buy with targets roughly $147 to $150 plus. Technical summary. Moving averages show strong buy signals across short-term and long-term horizons, MA5 to MA200 mostly bullish, MACD and volume trends positive. Stock has held up better than broader market amid oil rally. Support near recent lows, resistance tied to oil price moves. Short-term trading strategy, next 30 days. Buy on weakness if oil holds above $90 to $100. Add on pullbacks to 50-day MA with stops below key support. Target 8 to 12% gains on sustained energy rotation. Trail stops as oil moves. Long-term trading strategy. Accumulate as a core holding for dividend income and energy exposure. Use dollar-cost averaging during oil price dips. Benefit from scale, buybacks, and potential production growth over multi-year cycles. Risk and mitigation. Geopolitical de-escalation or sudden oil price crash could pressure shares. Mitigation, diversify across multiple energy names, maintain stop losses 8 to 10% below entry, hedge with put options during high tension periods, and focus on dividend yield as a buffer. Last 52 weeks price trend. Solid upward trend supported by oil price rising and operational performance. The stock has shown resilience and steady gains throughout the period, accelerating recently with the oil rally. Highest and lowest price. 52-week high approximately $171.23 reached in March 2026. 52-week low $97.80. Expert opinion. Analysts generally maintain buy ratings, emphasizing Exxon's scale, diversified operations, and shareholder returns. They view the current oil environment as supportive, though some note limited upside in base case scenarios without further commodity strength. Number 3. Chevron, integrated energy with Hess integration. Core fundamental summary. Chevron benefits from the completed Hess acquisition, Guyana exposure, and rising oil prices. Recent dividend hike and aggressive buybacks signal shareholder focus. Fair value estimates around $185 to $206. Some models see 20% plus implied upside at higher oil scenarios. PE reasonable for the sector, strong balance sheet and production growth outlook. Consensus buy rating. Technical summary. Recent performance strong, up roughly 10 to 27% in periods amid oil strength. 52-week range $132 to $209 plus. Bullish intermediate term technical assessment. Price action shows upward momentum with healthy volume on rallies. Watch $200 resistance and oil correlation. Short-term trading strategy, next 30 days. Position for energy rotation with entries on dips. Use oil price breakouts as confirmation. Set profit targets at resistance levels. Protect with stops below recent support. Long-term trading strategy. Build position for acquisition synergies and dividend growth. Hold risk analysis and mitigation. Integration risks from Hess steel and oil price volatility. Mitigation, monitor quarterly production updates closely. Use trailing stops, keep position size moderate, and balance with non-energy defensives. Last 52 weeks price trend. Strong bullish trend fueled by oil price recovery and acquisition progress. The stock has posted consistent gains with periodic acceleration during energy sector rotations. Highest and lowest price. 52-week high approximately $212.46 reached in March 2026. 52-week low $132.04. Expert opinion. Experts are largely positive on Chevron due to the Hess integration and upstream growth potential. Consensus buy ratings highlight attractive valuation relative to peers and strong dividend appeal in a high oil environment. 4. Devon Energy, DVN, U.S. Shale Pure Play. Core Fundamental Summary. Devon offers high beta to oil prices with solid free cash flow generation, projected strong at $70 plus WTI. Forward PE attractive, around 8 to 12 times in some estimates. Healthy dividend, around 3% yield, plus buybacks. Market cap approximately $31 billion. Valuation screens as undervalued on DCF in many models, significant discount to intrinsic. Revenue and margins sensitive to commodity prices, but resilient hedging helps. Technical summary. Strong recent gains, up 17 to 37% over various periods. 200-day MA significantly lower, signaling long-term bullish trend. RSI neutral to bullish, broke upper Bollinger Bands recently. High sensitivity to oil price swings. Short-term trading strategy next 30 days. Leverage high beta to oil with tactical buys on dips. Use tighter stops due to volatility. Target 12 to 20% if geopolitical premium persists. Scale out on strength. Long-term trading strategy. Suitable for commodity bulls. Add on oil corrections, hold for free cash flow returns via dividends or buybacks. Monitor hedging and shale efficiency improvements. Risk analysis and mitigation. Extreme volatility from oil price swings and commodity cycle downturns. Mitigation, use smaller position sizes, implement strict stop losses, 10 to 15% below entry. Hedge with broader energy ETFs, and exit if oil drops below $70 sustainably. Last 52 weeks price trend. Robust upward movement with high sensitivity to oil prices. The stock has nearly doubled from its lows, showing sharp rallies during periods of commodity strength. Highest and lowest price. 52-week high approximately $52.46 reached in March 2026. 52-week low, $25.89. Expert opinion. Analysts appreciate Devon's leveraged exposure to U.S. shale and attractive shareholder returns. Many see value in the current setup, recommending it for investors seeking higher beta energy plays. 5. Walmart, WMT, Defensive Retail Staple. Core Fundamental Summary. Walmart's massive scale, around $713 billion TTM revenue, and resilient consumer model shine in inflationary or uncertain times. Advertising and e-commerce growth, around 37% in recent quarters, boost higher margin revenue. TTM EPS around $2.75, PE around 44 to 47 times, premium valuation justified by stability and growth. ROE around 21%, solid balance sheet. Consensus positive with targets implying modest upside. Guidance remains steady. Technical summary. Stock near all-time highs, around $120 to $124 recently. 50-day MA above 200-day MA, Golden Cross bullish. RSI neutral, Volume supportive on dips. Low beta around 0.3 to 0.66 provides defensive characteristics. Short-term trading strategy next 30 days. Use as a safe haven in volatility. Buy on minor pullbacks with low-risk stops. Target modest 6 to 10% gains, ideal for conservative portfolios. Long-term trading strategy. Core defensive holding with growth elements. Accumulate on dips, benefit from consistent execution and e-commerce expansion over years. Risk analysis and mitigation. Consumer spending slowdown due to prolonged high energy prices or recession fears. Mitigation, monitor same-store sales and guidance closely. Maintain wide stops, diversify across other defensives, and exit if guidance weakens significantly. Last 52 weeks price trend. Steady and resilient upward trend with defensive characteristics. The stock has shown consistent gains and relative strength during market volatility. Highest and lowest price. 52-week high, approximately $134.69, reached in February 2026. 52-week low, $79.81. Expert opinion. Analysts praise Walmart's scale, e-commerce momentum, and defensive qualities. It frequently appears on Best Stocks for Uncertain Times lists, with positive consensus for its ability to weather economic pressures. 6. Procter & Gamble, P&G, Consumer Defensive. Core Fundamental Summary. P&G offers stability through essential products with strong brand moat, consistent free cash flow growth, and healthy balance sheet, debt to equity around 0.69. Defensive nature supports performance in risk-off markets. Valuation typically premium, but justified by predictable earnings and dividend aristocrat status. Technical summary. Generally exhibits low volatility with upward bias in defensive rotations. Moving averages often aligned bullishly during uncertain periods. RSI stays in neutral range, avoiding overbought extremes. Short-term trading strategy for the next 30 days. Add during market weakness for relative strength. Low volatility entries with wide stops. Target 5 to 9% outperformance versus growth names. Long-term trading strategy. Dividend growth staple. Hold indefinitely. Reinvest dividends. Focus on brand strength and pricing power through economic cycles. Risk analysis and mitigation. Inflation-driven cost pressures squeezing margins or slowing demand. Mitigation, watch quarterly margin trends, use stop losses on breakdowns below 200-day MA, keep allocation balanced, and pair with higher growth names. Last 52 weeks price trend. Relatively stable with mild fluctuations typical of defensive names. The stock has shown consistent gains and relative strength amid broader market swings. Highest and lowest price. Reflects lower volatility with a relatively narrow range compared to growth or energy stocks. Expert opinion. Analysts value P&G for its stable demand, innovation pipeline, and defensive qualities, often recommending it as a core healthcare holding in uncertain markets. 7. Micron Technology, MU, AI memory chips. Core fundamental summary. Micron is well positioned in high bandwidth memory, HBM, for AI servers. Strong demand from data centers drives revenue and pricing tailwinds. Earnings growth outlook positive amid AI cycle, though cyclical semiconductor nature adds volatility. Valuation reflects growth premium. Technical summary. AI sector exposure leads to momentum-driven moves. Recent strength in select tech names. Watch 50-200-day MAs for trend confirmation. RSI and MACD can turn quickly on news. Short-term trading strategy for the next 30 days. Trade momentum on positive AI news or memory pricing. Enter on confirmed uptrends. Use stops below key MAs. Target 12 to 18% on catalysts. Long-term trading strategy. Position for multi-year AI cycle. Average in during semiconductor corrections. Hold for HBM demand growth. Risk analysis and mitigation. Semiconductor cycle downturn or AI capex delays. Mitigation. Monitor industry supply and demand data and earnings closely. Use trailing stops, limit position size, and exit if non-tech defensives with non-tech defensives. Last 52 weeks price trend. Trend tied to AI memory demand cycles with momentum swings. Highest and lowest price. Stock exhibits typical semiconductor volatility. Expert opinion. Analysts are bullish on Micron's role in the AI memory boom, citing HBM demand as a major growth driver. 8. Vertiv Holdings, VRT, Data Center Infrastructure. Core Fundamental Summary. Critical provider of cooling and power systems for AI facilities. Explosive demand from hyperscale buildouts supports backlog and revenue growth. High growth profile with strong margins in the ecosystem. Technical summary. Momentum stock with sharp upward moves on sector news. Technicals often show breakouts, volume surges on positive catalysts. Watch for overextension after rallies. Short-term trading strategy, next 30 days. Capture breakout moves tied to AI spending. Scale in on volume confirmation, trail stops aggressively. Target 12 to 20%. Long-term trading strategy. Growth holding in data center theme. Add on pullbacks, hold as AI infrastructure expands over the decade. Risk analysis and mitigation. Overextension and valuation risk if AI hype cools. Mitigation, take profits on rapid rallies, use stops below recent breakout levels, avoid chasing after sharp moves, and monitor backlog execution. Last 52 weeks price trend. Strong momentum-driven upward trend linked to AI infrastructure spending. Highest and lowest price. Specific 52-week extremes reflect high volatility typical of growth infrastructure plays. Expert opinion. Vertiv is seen as a key beneficiary of the AI build-out, with many highlighting its critical role in data center power and cooling. They expect continued order flow. 9. Sterling Infrastructure, STRL, E-Infrastructure and Data Centers. Core Fundamental Summary. Benefits from data center, EV, and renewable construction boom. Strong backlog growth and project pipeline in high-demand areas. Smaller cap offers higher growth potential, but with execution risks. Technical summary. Infrastructure names have shown relative strength. Look for trend continuation via moving averages and volume. Short-term trading strategy, next 30 days. Buy on contract wins or sector momentum. Use volume for entry confirmation, manage risk with stops below support. Target 10 to 15%. Long-term trading strategy. Growth play in infrastructure. Accumulate selectively. Monitor execution and backlog conversion. Risk analysis and mitigation. Execution risks on projects and smaller cap volatility. Mitigation, diversify with larger infrastructure peers, set strict stop losses, monitor contract announcements, and limit exposure to 3 to 5% of portfolio. Last 52 weeks price trend. Positive trend supported by infrastructure and data center demand. Highest and lowest price. Reflects growth-oriented moves with notable upside from backlog strength. Expert opinion. Analysts favor sterling for its exposure to high-growth infrastructure segments, particularly data centers and renewables, while noting the importance of execution. 10. Medtronic, MDT, Healthcare Devices. Core Fundamental Summary. Stable medical device leader with innovation pipeline and reasonable valuation metrics. Debt to equity around 0.57. Defensive healthcare demand provides ballast in volatile markets. Consistent cash generation supports dividends and buybacks. Technical summary. Lower volatility often trades in ranges with support from moving averages during broader sell-offs. RSI typically neutral. Short-term trading strategy, next 30 days. Defensive allocation during uncertainty. Buy on dips to moving average support. Target 6 to 11% with low risk. Long-term trading strategy. Core healthcare holding. Hold for innovation pipeline and demographic tailwinds. Reinvest dividends. Risk analysis and mitigation. Regulatory hurdles or delayed product approvals. Mitigation. Track FDA updates and pipeline news. Use wide stops due to lower volatility. Maintain balanced healthcare exposure and focus on cash flow stability. Overall outlook and risks. The next 30 days favor energy, oil-driven, and AI infrastructure names for upside, balanced with defensives, retail, staples, healthcare for stability. Key catalysts: oil price direction, Q1 earnings mid-April, and Middle East developments. Disclaimer: this is for informational purposes only and not financial advice. Markets move fast. Always do your own research, consider your risk tolerance, and consult a professional advisor. Data reflects conditions and analyst views around March 28, 2026. Stay tuned as we monitor these names and weekend headlines. This has been your forward-looking U.S. stock market segment. Have a safe weekend.